Currency, it's the largest and most liquid market in the world. I'm Brigid Taylor and this is Currency Wars. Today I'm joined by Jan Sluis-Cremer from RMB and Danny Pienaar from Micromega. The US's Federal Open Market Committee announced the end of its quantitative easing 3 program last night. The FOMC statement was largely upbeat on the outlook for the US economy. The Fed is still emphasizing that rate increases could happen sooner than anticipated should the US's growth and inflation accelerate beyond expectations. This puts emerging markets and the rand in a vulnerable position against the dollar. Keep in mind that while the probability of a Fed rate hike has been one of the key drivers of dollar strength and volatility spurts in recent months, it will not require a hike for this dollar trend to continue over the medium term. This is because it has been strong fundamental backing from the tightening of the US liquidity cycle. South African bonds are now vulnerable to a period of weakness. A squeeze in the relative value offered by emerging market bonds as US Treasury yields rise warns of readjustment in risk positioning. This is on the back of the heels of what was a strong week of foreign inflows into the local bond market. This helped to strengthen the rand over that period. South Africa's consumer price inflation, which is now back within the target band, and growth concerns not only domestically but globally are likely to influence the Reserve Bank's decision to hold rates when Monetary Policy Committee meets in November. The hike cycle as a whole is still seen to be very shallow, with additional hikes likely to come very reluctantly and in reaction to the rand, rather than preemptively to alleviate its fundamental shortfalls. Joining me now to discuss how the week's economic highlights could impact the rand, Jan Sluis-Cremer from RMB and Danny from Micromega. Welcome back, Dan. It's been a long time. Right, so we've had an interesting week again. We called it quite well. Last week we were looking for a break below that 11 level. I think it went a little bit further than the market had anticipated, but short-lived. I mean, we saw those bond inflows. We've had good foreign interest, but that's looking like it may reverse post yesterday's FOMC. Do you want to give us a little bit of a highlight in terms of what you saw?
Well, to be honest, I think the move low was basically driven by the on-off rate call locally. And guys hedged in terms of they were looking for 25 basis points. Remember when Lesotho was announced, they were looking for even 75 basis points. There was some hoo-ha about that. But the market came back, and after the CPI numbers and after PPI today, it looks like we're going to have no hike there. And I think in the week leading up to yesterday, we had a lot of guys getting out of bonds, and for that, the rand hedges had to be cut. So that's why we saw this influx of dollar rand. Got down to 83.85, which was a break on the top side. And then last night, Yellen, unlike Bard, she wasn't too poetic and no longer bringing her milkshake to the yard. So, you know, they're no longer buying any QE. And over and above that, she did sound a little bit more hawkish, and dollar rand reacted negatively to that. The market hasn't spiraled as much as I thought it would, to be honest, and it still trades fairly well, but I think we're back into a weakening pattern. So we're probably looking for slightly weaker levels from here, dominated by US numbers. And then locally, the story doesn't really change. It goes in and out of focus more so. So yeah, if anything, a slightly weaker bias, but the rand's still trading fairly well, to be honest.
So it's pretty, yeah, so we're in that, you know, sub-11 kind of level. In terms of RMB's view around Lesotho taking over the governance of the Reserve Bank, looking at interest rate decisions going forward, specifically if we look at what happened with FOMC, and we've had this Brazil rate hike as well yesterday, what is your view with regards to where South Africa sits in the rate hiking cycle?
Look, I think, you know, with the new governor at the central bank, I mean, he's going to continue with what his predecessor and their policies. RMB's view is still a rate hike next month, 25 basis points. But as Dan says, you know, as we're starting to look at data, it may become, you know, going into the coming weeks, may become less likely that we do see a rate hike. But house view is still 25 points in November.
So still looking at a shallow curve. If anything, we're looking at shallow outcomes in terms of rate hike potential in South Africa. There's a lot of skepticism as to the imbalances in the South African economy and whether or not we should in fact be seeing a rate hike. But if we look at the US, and quite interestingly enough, if we look at the FOMC statement, yes, it was hawkish. They didn't, however, talk about some of the issues around how the global growth slowdown is going to impact the US economy. And that was something to consider because previously that was something that put the FOMC almost in a dovish kind of stance.
Yeah. I think I agree with Jan in terms of what he mentioned in terms of rates. I'm looking for no change. I think we were looking for that before. In terms of what Jan said, RMB, a couple of guys have stuck to it. Two of the big houses came out, they're also looking for no hike. So in terms of our rate cycle, we will see rates higher if it's this year, maybe 75 basis points next year. And I think we were latching onto the back of the US Fed. And in terms of, they were fairly, before, they were looking for numbers to hike rates, they were going to do it aggressively. Then they changed tack and became quite dovish. And global growth has to be taken into consideration, not only locally where growth is it's terrible. It's down in the doldrums, and now global growth is slowing down as well with the Japanese numbers, with the US numbers. So in terms of that, rates need to go high at some stage. It's just the timing on the back of that. And I think the US, they're not as far down the road as they thought they were. So for them, I'm even looking still for no move next year and possibly only 2016.
Sure, so that's quite aggressive. I mean, I think that's the big actor in terms of looking out for scenarios that drive the currency. So if we look at the US Treasury South African bond curve spread, I mean, that is something to keep an eye on, purely just because of the impetus that was put on yesterday's FOMC. What happens to US Treasuries if South African rates remain on hold or very, very benign? It does put pressure on the currency. I mean, we saw, I think it was almost 4 billion rand of inflows this last week. So that's been quite significant. How much of that do you as put towards the rand strength that we've seen?
I think probably a fair bit. I mean, as Dan alluded to in the beginning, we've probably seen a bit of that's gone into the rand strength. No, I think also the rand ran out of momentum on the top side, so we did need that little bit of correction. It was really struggling in the higher teens and the 11s as we broke below 98. We touched the 100-day moving average down at 82, 83. We've bounced back. Daily close above 95 tonight. I think we can get some weakness back up to 1103, 1105 again. So, whilst those bond flows did help the rand strengthen, I think the rand was always going to come back in any case because, and I think we spoke about it the last time too, I mean, the rand was looking very overdone. Up in those 11.15s, 11 sort of 20 levels, and it was really, really struggling to try and break higher and make new highs.
So that's quite an interesting scenario. So we're back within ranges. We're not in those lower ranges. We're sort of in that let's call it 1183, 1083, 1120 sort of range is the wider area. With that in mind, though, and we know that down the line we're going to see the Fed start to hike. So even when there's verbal diarrhea around the fact that they're potentially there's hawkish statements, the US unemployment looks a lot better. These things do impact the market in the short term. It's very unlikely that only when we see a hike will we see a correction of the markets. It's going to be preempted as we come closer to the likelihood. So I think the big discussion was yesterday they talked about stopping QE3. That's a concern because that's moving right in tune with what they looking for with regards to the interest rate hiking cycle at some point. So with that in mind, in terms of the view going forward, if we're looking into we're going through the Christmas cycle now, going into the beginning of next year, nothing's going to change in terms of interest rates in South Africa. If we're lucky, we see 25 basis point hike and we see a flat rates cycle out of the US and out of Europe. What is your view and what are the things that you would be watching for in terms of us going into this last 100 meters towards the end of the year?
I think for us, certainly we'll be looking at how the government reacts to the policy set out in the budget. I think for one, we have massive differences in how they're going to control current account and spending. That's a key point to look at. I think that'll affect the rand weakness. I think rhetoric coming out of the States and out of Europe, it will be key. So for me, going into the end of the year, I think the rand is more prone to headline risk at the moment. So if one of the Fed members comes out somewhere on a Saturday afternoon and says, well, they feel like hiking and it's 1 out of 7, dollar rand will react to that, because I think as we move into the year, most participants in the market are trying to stay out of more riskier moves and either bank what they've had for the year or run and hide. So in terms of the risk going forward, I think it's all driven by headline at the moment, and our news I think really will be dominated by Africa through this period, and local in terms of how the locals go about fixing our current account deficits and our current and how the rand reacts to what the government's now put in place. And we had the budget, there was some euphoria, the rand came back on the back of that, but the proof's always going to be in the pudding and how we go forward from that. So I think that's for me the risk going to
So it's the tacky hits the tar. We're going to be watching that as we're heading towards February, and I think that those are going to be conversations that we certainly will have with regards to the import and export type flows that we've expected to see. We always know around the Christmas season you've got those importers. What is your view in terms of flows that we're likely to see that'll impact rand levels?
Well, in the last couple of days, especially with the stronger rand, I mean, we've seen importers soaking up all the excess dollars that have been around. I mean, they've suddenly appeared out of the woodwork and from under the mattresses and everywhere else again, which has actually been good to see.
Jan's got a spot on, I think, in terms of the exporters locally. They always try and hold on till the end, you know, because rand always weakens, and you normally see that 20 to 27 December, quite a strong rand on the back of that.
And you know, importers now not only taking advantage of the stronger rand in the last couple of days, but you know, also starting to hedge out, you know, for up to the sort of the 2 to 3 month period. So that carries us over the Christmas and the New Year period. So you know, looking to, you know, cover their pre-Christmas orders, and
which is great. I mean, it's the bottom side of the range. So we're going to look at what the levels are. I want you guys to think about some trading strategies for the week ahead, and then we'll talk about some technical levels. Now that we know where we stand and the real risks and opportunities, we are going to look at levels for the following week. Jannie, I'm going to actually ask you to start today.
So dollar rand, as we said earlier on, I think 11.95, I beg your pardon, 10.95 at the moment is kind of your pivot point. Daily close above that, move up to 11.05 again. Otherwise, we just revert to ranges. 10.83 very much bottomish at the moment. The interesting two to watch are the crosses. They haven't really reacted that much. In fact, if you look at the kind of the more medium-term charts for Euro Rand and Sterling Rand, both pointing for a stronger rand in the cross. So
okay.
I'm kind of looking above 1380 Euro Rand and probably 1760 on Sterling Rand for it to break higher. Otherwise, we're looking much lower again.
Okay, so those are nice bottoms to watch though. Danny, what is your view in terms of the week ahead?
My view is slightly different to Jan. I don't like to disagree with him, but for me, I'm looking for a weaker rand. I think the crosses will eventually react to it. 83, 85 was a push for me, and I think helped by the bond flows we spoke about and the little bit of mini budget euphoria. I think that we've had this sort of correction. If I look at charts up to 1140 down to 1080, you know, if we are in a wave kind of motion, we should be looking back at 11.25. The risk to that is what Jan mentioned in terms of coming in the end of the year with exporters, but in the very short term over this next week, I think 88 is going to be the bottom, and I'd be looking for 11.08, 11.12 on the top side.
Fantastic, thank you so much. So in conclusion for the week, still 1083, 1088 on the bottom according to Jan and Danny. Look to buy your dollars there if you're an importer. Looking for slightly weaker levels, however on the crosses you can look at about 1370 as your base on the Euro Rand and around 1760 on your base for the pound rand. We are looking for weaker levels, so exporters, hold on to your socks, you may just get lucky. Until then, please send us your questions or your comments to either at CurrencyWars410 or myself at Brigid Taylor for your personal responses to the FX markets. Until next week, good luck in the trenches.